Hey guys, welcome back to my channel. I will just go straight to the point. So this is Yahoo Finance. Yahoo Finance is basically the finance platform where you learn about different US stocks, what's happening in the US economy and all of that. I'm using the website. This is what it looks like on your computer and also on a tablet. If you're using the mobile app, you might not be able to get some of the information I'm going to be sharing with you, but I also use the mobile app, right? But I'm on a computer right now. And again, if you're serious about analyzing a stock, always use the website. Don't use the mobile app. The mobile app might not show some things, and I'm going to explain as we go on. So I'll go straight to the point. Let's look at a stock. This stock is Fluence Energy, FLNC. Now FLNC is one of those stocks that has been doing well in the last 1 year. We're going to talk about what they do and everything. But I'm going to just do like a top-down approach to explain what to look out for when you're checking out the stock ASAP. If you don't have the time, to go over the jargons and everything, what to look out for. So this stock is FLNC. It's listed on Nasdaq, which is also like a market in the the US sector. And if you scroll down, you see today's price is $18 per share. It has gone up by 4% today. Basically, it means if you own one share of it, your money would have gone up by this amount today. It has gone up by 4%. And this is the chart. What the chart does is it historically shows you how the stock has performed over time. This chart you see here is for the last 24 hours. That's why you see 1 day. 5 days, the last 5 days, how has it done? It has done minus 15%. Last 1 month, 48%. Just looking at this and like the gap between this, 5 days ago it was 15%, minus 15%. Last 1 month it was 48%. If you're seeing this big gap, you can easily tell that this stock is a very volatile stock. It means it moves up and down like sharply every day. I mean, look at this, it's 4% up today, and I'm sure that if you change it to last 24 hours, which is 1 day ago, you see it even went way up than that. Maybe it went up to like, I don't know, 10% up today, then it started pulling back. So the stock is very volatile. What metrics do I look out for here on the chart? Well, I use the last 1 year first. 5 years is fine, but it's a tech stock. Tech evolves over time. Do you get? And because tech evolves over time, you don't need to go as far as way back. It's either the company is doing well or not. You don't need to go as far back as way back. But I mean, it's allowed. You can click here to see how they are doing in the last 5 years, the last 1 year, year to date, and all of that. So I use 1 year. Last 1 year, this is how it has done. Year to date, meaning from January 1st to date, how is it doing? Last 6 months, 20%. Year to date, minus 5%. It's very volatile. It's going up and down. The yellow dots you see here are basically events that happened on the chart. Maybe a company rated them. An analyst from a company rated them as a buy. Jeffries upgraded it to a buy on February 10th. That's why you see this yellow dot. Just different analysts rating the stock. And the latest one is this one. Citigroup maintains. We also raised it that the price target is going to get to $26. Currently, it's $18. So you see these ratings. If you can't see these yellow dots on your chart, click on the settings icon and turn on show key events. So make sure you enable these things. So just looking at this chart alone, I can easily deduct that this stock is very volatile. And of course, some companies have been rating it as a buy and have been maintaining that it's going to go up. So let's move to the next thing. This is the market cap. The previous day, this is what it closed at, and then it opened today at this price. Then this is the bid and ask price, average bid and ask price 13.22. So you can't get a proper order book here. This is the closest thing you can get to an order book if you're looking to buy this stock. This is the market cap. PE ratio is negative. It's basically blank. If it's blank like this, it means the company is either not profitable or they are owing a lot of money. So I always tell you guys, if you don't see a PE ratio, it means that company is either not profitable or they just owe a lot of debt. As you can see here, they are not profitable because earnings per share, your EPS per share of this stock is minus 0.31. It means it's not profitable at the moment. If they pay dividend, you will see it here. and when the next ex-dividend date is going to be. That's the qualification date for the dividend. You see it here. Average volume is around 7 million at the moment. Like, there are a lot of buyers and sellers getting in on this stock, right? And if you want to see what they do, you can see the information here and where they operate. I already know that they sell energy storage products, and they use, software, hardware, and AI to do these things. That is why the stock has been doing really well. If you want to check out their website, this is the link. How many employees they have, the full-time employees only. This is it. This is the sector. This is, like, you can see all of this information here of what the company does. And that is why Yahoo Finance is one of those places you can just use to check out the stock easily. We're going to skip the news because I want us to come back to it later. But keep in mind, we've looked at some things. Historically, in the last 1 year, this stock has done well. It has done to 49%. Year to date, it's down, right? But let's go down. Let's keep going down. We're going to check the news, don't worry. Then let's look at performance. In the last 1 year, how has it performed here against the S&P 500? Well, it has overperformed the S&P 500 in the last 1 year, but year to date, from the start of this year, S&P 500 has actually outperformed FLNC. 3 years S&P 500 winning 5 years S&P 500, meaning that it's the last 1 year that this stock has actually done well, right? Now, this is the last earnings report. When they reported their earnings, they said, oh, this is how much we made, this is how much we lost. As you can see here, the last 3 earnings was this. They missed their last 2 targets, but the very last one, which was recently when it did happen, we can find out by coming up here. May 6th. Their last earnings on May 6th was green. They actually did good on May 6th. That is the one you see here. Now, if we want to see that event on the chart, we can see it around here. See, May 6th, EPS surprise of 32%. Basically, they reported their earnings. It's not like they're profitable, right? But they shocked everyone by actually making progress. So you can see the stock went from $14 to boom, all the way to $26, $27. And since then, it has been pulling back. So that is why I always say wait for their earnings. If their earnings are happening anytime soon, wait first. Let's hear what they are going to say, during their earnings, if they did well or not. As you can see, their earnings here, when it happened on May 6th, it shot up the stock. The stock went all the way up here. And now it has rested around $18 per share. So it's always good to wait for the earnings of a stock when the company's earnings is close before you decide to buy it. So you come down here and let's click on annual. You see, year over year, this company, they've actually been making money. Revenue is good, right? But the profit is really the problem. The company is barely profitable. If I click on this yellow one, let's see, it's minus 17. Let's go back. It's minus 17 million. Let's click on quarterly. As you can see, they're not really profitable yet. Barely profitable, but revenue is good. They are making sales, they are getting customers and all of that. The analyst rating you see here on the chart, these dots you see here, this is basically a summary of them. I scroll down here. This is a summary of them. So analyst recommendations. 5 analysts are saying to buy, 12 are saying to hold. Basically, don't buy, don't sell. Some are saying it's going to underperform, but mostly it's either buy or hold. None of them are saying it's a strong buy, and none of them are saying, you should go ahead and just put all your money in it or something. So the last analyst that rated it was Citigroup, and they're saying it's going to get to $26, right? Now, you see some of the information here as well, the valuation measures. You see the market cap here, market capitalization. Then you see the enterprise value here. What is enterprise value? Well, your enterprise value is basically it represents the true cost to buy this company right now. If you're looking at how much they owe, how much shareholders have, lenders, all of that, everything, and then you subtract the cash left with them, you are going to get this with the enterprise value of a stock. So right now, enterprise value is actually in the positive. This company is, they have money, right? But it's just that the business is not making profit. You don't see plenty negatives here. Another place you want to look at is your financial highlight, which is the income statement, just a summary of it. You see your profit margin here. You see your return on asset here. Your return on asset is basically how efficiently a company uses its total assets to generate profit. So right now they are not generating profit with their total asset. The formula for this is actually net income divided by total asset, but you don't need the formula. You don't need it. Then your return on equity. There's return on asset. There is also return on equity. Your return on equity is basically how much profit the company is generating with shareholders' money. Me and you, our money. How much are they making with our money? So again, your return on asset is basically how much, the company makes with its total assets. Here, shareholders' money. How much is he making with our equity? Revenue is positive. You see, it's 2.58 billion. Like I said, they are making sales. They have customers, but they're just not profitable. So that is why I usually say, this company is not profitable. You can see some of the other things here, like their cash. They have some cash, but at the same time, you have some, debt to equity here, and some other stuff. So looking at this, right? Just looking at this, you can actually tell that this company is trying to grow. I mean, they did 250% in 1 year and all. They have things going on for them, right? But yeah, they are not profitable yet. And because they are not profitable, it's a number one flag. You should be careful with the stock. You shouldn't put all your money. Now, if you want to ride on this wave or fact that they are actually very volatile and you can make money from it, what you want to look at is news. Come down to news. And that's why I'm saving it for last. The news 3 hours ago just says that Fluence Energy raised $420 million to expand grid storage funding options. This is very good news. This is a very, very solid news. Fluence Energy just ran 98% in 1 week. These 4 AI power stocks on that. This is just, some speculation news and stuff. But I think I want to go back to the top here and check out this news because it was like 3 hours ago it was reported. However, I want to know more, so they raised money, and when did this happen? It doesn't say exactly when it happened. Well, let's go down and see if we can find strong investor willingness. Yeah. This is really, really good. And fresh capital around $21 per share. So this is actually very, very good news. What I'm looking for is the date. When did this happen? When was this reported? Right? So then you see some risks here and all of that. So when you start seeing good news about a stock like this, not just one news, maybe 2 news, 3 news about a stock like this, you should actually get in. You don't have to get in with all your capital, of course, but you should get in with a little bit of money to see where it's going to go. Because if a company is raising money, it's good as long as they are not diluting a lot of their shares. It's actually a very good thing. So this is one good news. Let's see. Sharp percent share. I haven't seen another solid win strategy industrial water treatment contract in Texas. It was 7 days ago. This is solid too. This is a very good one. So let's come back to it and check. May 12th. Yeah, this was last week. So this is also good. This is also very, very good. So that's 2 news now. So there is a huge likelihood, if it hasn't already pumped, there's a huge likelihood that this stock is actually going to truly go up to $26, right? So it's currently at $18 per share. What I would do is just go in with like 10% or 20% of the amount in my portfolio to see how it's going to go, and ride it from there. But I wouldn't put a lot of my money. Why? Because the company is not even profitable. I am just investing based on news. So some people invest based on news, some people invest based on, contracts, some people invest based on, strong fundamentals. This stock does not have strong fundamentals, right? You don't even know what the PE ratio is. Some people would overlook this stock, right? But seeing that they are trying to raise money and they are pushing and the last earnings was good, I would actually take a look at it. So this is just an overview of how I quickly take a look at a stock to decide if I want to buy it or not. But don't leave yet. Another thing you might also want to check out is, instead of going to news here to read the news, you can go on Twitter. If you go on Twitter, you can just search for the stock Fluence Energy, and then add a dollar sign. Just type FLNC with a dollar sign and search on Twitter to see if you see more news. You can also come here to conversations up here to see what other people are actually saying about the stock. So if I come down here now, May 19th, some news here, all this talk about Citi raising price, research, blah, 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 pump and dump by Citi, back in JP Morgan's, blah, blah, blah. I actually agree, because if you look at that chart, it went up then dumped, so do you think the 20 million shares are already sold? Blah, blah, blah. So these are conversations, these are talks around the stock and things you can actually learn. You can learn a lot from here. If you want to see things like float, like the free float, like how much shares are actually outstanding, how much shares are left, you can come all the way down to, let's see, I'm looking for float. Yeah, this is float. Float is 97.41 million. What is your float? Your float is basically, if you take out the shares that insiders are holding, internal buyers are holding and everything, what is left for people like me and you to trade? What's actually left for me and people like me and you to trade right now is actually this outstanding, yeah, but the free float in the market, circulating in the market right now, is this one, right? So you want to check the float. If the float is under 100 million, it means that the stock is going to be pumping and dumping. Like it basically goes up and down faster if the float is small. If the float of a stock is a big number, like 1 billion, like your Microsoft and co, if it moves by, if it moves by a bit, you might not notice. It might just be like 0.5% or 1% or 2%. But if a float is under $100 million, the stock would most likely just be, going up and down massively. So, yeah, that's pretty much it. Now, from here, or trading view, if you want to read the technicals of the stock, you can go over it and read the charts and all of that, and see how it goes. But I imagine most of you don't know how to, read the technicals of a stock and all of that. So we're going to stop here. But with this small knowledge, I'm hoping you already know a thing or two about companies like this and whether you should invest in them or not. This is not financial advice, but I hope this has helped you. I'll see you on the next one. Bye.